anybody and everybody will need life insurance, because if you or I were to pass away, someone financially is going to have to pay for that. No?
Hi everyone, welcome to my channel. My name is Reni. If you're new here, welcome, and if you're a returning subscriber, welcome back. On my channel, I do fashion, finance, and lifestyle content. So today's video is related to finance, and we're going to talk about life insurance. What is life insurance? Why do you need life insurance? Who needs life insurance? How do you get life insurance? We're going to cover all of that, and I'm going to be interviewing Nicole from CPN Financial. They are a wealth management firm that really advises people on how to grow their wealth, and life insurance is a big part of that. I think oftentimes we overlook life insurance and we think, oh, I'm young, I don't need life insurance. But after this conversation, I truly left shook, because I realized that I too, as young as I am, I do need life insurance, and you probably do too. So I hope that you enjoy this video. Let me know what other experts you want to see, who you want me to talk to, what topics you want to see. I am going to get them all done for you. So let's get into the video right now. Hi Nicole, I'm very excited to have you here. Thank you for joining me today.
Yes, thank you so much, Reni, for having me. I'm happy to be here with you today.
I know life insurance is a huge topic, and so many people had questions for me. They were like, why do I even need it? Who needs it? How do I get it? So I'm hoping that you as an expert can answer those questions for me. So I wanted you to first introduce yourself and tell my audience a little bit about you.
Absolutely. So hello, everyone. My name is Nicole Simons. I'm a wealth management advisor with my family business, CPN Financial Services. My family business actually has been in operation for over 30 plus years. It was started by my dad when I was a kid. He was a very successful insurance and investment broker, and it was important to him to create a legacy for his family. So he decided to create his own brokerage and named it CPN Financial. So CPN actually stands for Colin, Peter, and Nicole. So I am the N in CPN Financial. And hopefully my offspring, that starts with the N, may take over that spot as well. But yeah, we're very big at, planting the seeds of generational wealth and helping our clients build assets and create wealth through things like insurance and investments. We have brokers, all throughout the city that do real estate, mortgages. So we're kind of your one-stop shop, where we want to make sure that our clients have that financial fence built around them, so that in the event of anything happening, like premature death, critical illness, or disability, that their family is not very financially impacted by that.
Mm-hmm. Wow, good to know. I love that your father started this. I love seeing Black-owned businesses. So let's start off with some of the basics. The most basic question out there is, what is life insurance?
So life insurance is essentially the foundation of any, sound financial plan. It's a contract between you and a life insurance company, where they will provide a lump sum payout, also called as a death benefit, in exchange for you paying monthly premiums to them every month or annually. So it's basically, like I said, a death benefit that gets paid out to your loved ones or beneficiaries in the event you pass away.
And I heard there are many different types of life insurance. Can you tell us about the different types of life insurance that there are?
Yes, definitely. So when it comes to life insurance, there's basically two main umbrellas. There's term insurance and there's permanent. So term insurance basically is coverage that covers you for a certain period of time. So you can get a 10-year term, 20-year term. You can go all the way up to maybe even a 40-year term. And what it means is that you will pay monthly premiums for that duration of time. And if you happen to pass away during that time period, the life insurance company will pay out the death benefit to your beneficiaries. Mm-hmm. However, you're only covered for that period of time. So let's say you were to get a 20-year term and, hopefully you don't pass away. In year 21, you have a few options of what you can do. So if you still need life insurance coverage, you can renew the term for another 20 years. If you don't need life insurance coverage anymore, you can cancel it if you don't need it anymore. But you have to think of term insurance or life insurance kind of like car insurance. If you cancel it, you don't get any money back. So there's no return of premium on that. It's basically they took on the risk to insure you for that time period. You paid your premiums, but you don't get any money back. And then the third option basically is if you foresee that you do want life insurance for down the road, into your 70s or 80s, you can convert some of your term coverage to permanent. So Permanent coverage essentially is exactly how it sounds. It's permanent. You have it for life. There's no expiry date on it. If you pass away at 80 or age 101, the life insurance policy is guaranteed to pay out because unfortunately we have to pass away at some time. So those are the two main umbrellas. There's term for a certain period of time, and then there is permanent. When it comes to permanent coverage, though, there are a couple options that fall under that umbrella as well. Some of them that you might have heard of would be universal life, which is essentially permanent coverage, but it has an investment component as well, which will allow you to put extra money into your policy called overfunding, where you can pick various funds to put that money into, and it grows tax-free within the policy. Oh. That money basically essentially creates cash value. So as your policy grows, you can use that cash value, take it out, do whatever you want, or leave it within the policy, and it will pay out to your beneficiaries tax-free as well. Okay.
One question about that. Could you take it out at any time, the money that you've been putting in there?
Absolutely. Yes, you can take it out at any time. You'll have to definitely check the, provisions within your contract, because sometimes there could be fees depending on how early you want to take it out. So I always advise my clients, if they are going to overfund their universal life policy, think of it more as a long-term investment. It's not a bank account where you're going to put money in, take money out. Think of it as something that you kind of want to create, wealth for the future. And though that cash value also can be used to pay premiums as well. Meaning, so let's just say, 15 years down the road, you have some cash value built up, but you want to take a break from paying your insurance premiums. You can actually use the cash value to pay the premiums for the policy as well. So it's called a premium holiday. Moving on to whole life insurance. Whole life is the other type that may be very popular with people. Whole life is also permanent as well. And with whole life, essentially, it guarantees cash value as well. But it's not a policy necessarily where you're overfunding. They just basically maybe take a small portion of your premium and create guaranteed cash value that you can use down the road as well. But with whole life, the cash value does not really pay out on death. So it's something that you want to use while you're alive, because it's not going to pay the death benefit and the guaranteed cash value. The guaranteed cash value basically is for you to use anytime while you're alive. Or if you cancel the policy for whatever reason, you can expect to get the guaranteed cash value paid out to you.
To me, it sounds like permanent makes more sense, but why would someone choose one over the other?
You have to understand that life insurance is not a one size fits all thing. When you're working with myself or, your advisor, we have to take a look at what your current, assets and liabilities are. What are you trying to protect, right? And for some people, they don't really care necessarily about, generational wealth and having, money down the road. Some people kind of just want coverage for the first maybe 20 years of their young life. Because at that point, you could be finishing school and have a lot of student loan debt. You could have a young family, 3 or 4 kids. So when you're in your 20s and 30s, at that point in our lives, that's when we tend to have a lot more debt. So term tends to be an easier pick for people, because term insurance, when you compare the two, is actually a lot less expensive than permanent, because statistically, life insurance companies know that based on your age and your sex, they know that the likelihood of you passing away prematurely is very slim. So they can charge you a lesser rate because most likely you're going to outlive the term, right? So it's more cost effective for somebody to have a term policy in the early years, because you're able to get a larger amount of insurance to cover your debts and all of that, versus getting permanent, which might cost you more, and it might not fit your current need at that time, because you may not be able to afford as much, if that makes sense.
Okay. Yeah, that makes a lot of sense. So I guess the best thing to do would be to reach out to someone like yourself to figure out what works best for your financial situation, right?
Yeah, that's definitely the first step. I always caution people, stay away from people that push one over the other. There might be some other companies out there that say, term is the best and whatnot. For me, myself, I'm very, unbiased. It's important to take a look at the client's current financial picture to see what best suits them, right? When people come to me, they always have different needs. Some of them, want that life insurance for the generational wealth, and it's important for them to have permanent and cash value. And some people, that's not their main concern. They just want to have enough to make sure their mortgage is covered, or to make sure that they can fund their kids' education if they were to pass away prematurely. So once again, it's not a one size fits all. It's best to discuss with an advisor to see which one would be the best choice for you.
Who needs life insurance? So I know, like, I'm 24 years old. I'm very young. I'm very healthy. Do I need life insurance? Who actually does need life insurance?
Yeah, great question, Reni. So I come across that a lot because, of course, young millennials, especially early 20s that don't have any kids, like yourself, are wondering, like, do I even need this? What would I need life insurance for? Mm-hmm. But like I mentioned before, just because you're young, that doesn't mean that you don't need it. We all, kind of have that Superman complex where we think nothing's going to happen to us, right? We want to live forever, but unfortunately, that's something that we cannot control, right? So that means that at any point in time, any one of us can die prematurely. And what that means that if you were to pass away, that would incur, estate costs and, funeral and all of that, which is essentially why you're seeing a lot of GoFundMe pages being, raised a lot. Because there was just no sense of planning for this untimely death, right? So who needs life insurance? Let's get back to your question. Who needs life insurance? Anybody and everybody will need life insurance, because if you or I were to pass away, someone financially is going to have to pay for that, no? Right? Whether it's our parents, grandpa.
Yes.
Yeah, somebody's going to pay for it. Whether you're crowdfunding, asking for the community for help, someone has to pay for that. So anybody that doesn't want to burden anybody else financially is somebody who wants to make sure they have life insurance in place. You don't want other people to be responsible for your funeral costs. You don't want GoFundMe being put up to raise money for you. You need life insurance. Also, coming out of university, college, you might have student loan debt. If you were to pass away, somebody's got to pay for that. Could be your parents that co-sign for you, whatever the case may be. So once again, as a young person, that's also why you want to get, a policy. And it doesn't have to be huge, but at that point in time, you want to make sure you have something where student loan costs, funeral expenses, those can all get paid. And lastly, when you're in your early 20s, most of the time, that's when you're in the best shape of your life. You're young, you're healthy, you're traveling, and life insurance costs are predominantly based on your age. So when you get life insurance in your 20s, you're actually locking in that low rate. So if it's a term, you're locking in that low rate for that duration of time, 30 years, 20 years, or whatnot. And if it's permanent, even better, you're locking in that rate for the whole duration of the contract. If it's $25, then you're locking in that $25 all the way to 101. And, coming from my family business, I deal a lot with my father's clients who he serviced when they were in their 20s, and now they're older in their 60s and 70s. And so many of them, for whatever reason, made the choice to possibly get term, not, maybe realizing that permanent might be something they want to consider later on. And so many of them are looking to get permanent now, but it costs them so much more, right? Because you get term when you're younger and it's cheaper and it's nice and that's good to have. But it's important that, at some point in time, if it's important to make sure that you have final expenses paid off down the road, you want to incorporate some permanent too, because if you wait too long to do so, it's going to cost you a lot more when you're older.
Okay. And just speaking for myself and a lot of people my age, I know that one reason we don't get it is because our work gives us some sort of life insurance policy. So would our work life insurance covers policy be sufficient, do you think? Or do we typically need more than that?
Usually you do need more. I mean, as a young person, coming out of school, usually your work coverage sometimes might be enough. Usually work coverage, and obviously you want to check your benefits booklet, but a lot of the times work coverage that I see is maybe 2 times your salary. So if you're making $50K a year, that might be $100K payout. But one thing that people don't understand with work coverage is that you're only covered, Reni, while you work there.
Yeah.
Right? Sure. And especially when you're young and you're moving from employment and employer to employer, you're only covered for that duration of time you're there. So if they lay you off, if you leave, if you just get fired, you're not covered anymore. So the benefit of having your own personal life insurance policy is that it will follow you wherever you go. Case in point, I've seen, people who have stuck with their life insurance coverage at work for duration of their life. And when they retire now in their 60s and that coverage can't come with them or whatever the case may be, then they want to come and get their own policy, which I absolutely can help you with. But once again, it's going to cost you a lot more because now you're in your 60s and now you're getting your first policy, your first independent policy for the first time. Get your own policy, while you're working. It's the best thing to do, in my opinion, because it's covering you wherever you go. You don't have to worry about it. And more importantly, you're in control of it. You make the decisions, you pick your beneficiaries, you pick the coverage amount. With work, there's a lot more restrictions. And more importantly, it's a taxable benefit, where when you have it independently, it is a non-taxable death benefit.
Okay, so there's lots to know. And basically, I need to go get life insurance as soon as possible. So when do you need life insurance? Like, can a 15-year-old get life insurance, or do you have to wait till you're 18? Is there a certain age or life event?
Most people, for example, will get it, I would say, maybe in their early 20s or whatnot, right? For most companies, as early as 18, or even 16, I believe, maybe you can even get your own personal policy. But when you're younger than that, most of the time it's your parents that will get it for you, right? So me as a mom myself, I got a life insurance policy for my son when he was 2 years old. He's now 8. And by doing that, I got a permanent policy for him. And the reason why I chose to get a permanent policy is because by doing that, he's 2, so obviously it was very cost effective. But there are different ways that you can structure the policy where you don't have to pay for it for life. You can structure the policy where it can be paid off in 20 years. So I did a 20 pay for my son, where basically in 20 years' time, the policy will be paid off. And it's a whole life policy, which means, and we'll get into this later, which means that there are participating dividends that get paid into the policy, aka cash value. And that cash value will grow over time, even when the policy is done being paid for. Wow. So that's where the generational wealth aspect comes in, where my son will have a policy paid in full that he can use towards his family, but it will also continue to grow year after year, even after I finish paying for it. Not only is there the wealth creation part, but there's the health aspect too. As parents, we don't really know in the future how our health can change for ourselves and our kids. Mm-hmm. So by locking in a small policy, doesn't even have to be anything big, you're basically protecting their insurability and ensuring that they'll have insurance down the road. So even if their health changes, or if my son's health were to change, I made the decision to lock in and get coverage for him now so that he'll always have something.
Obviously, he's going to live a long life and everything. What if the company disappears in that time? Is that a thing that happens? Like the insurance company goes bankrupt or something along those lines?
Well, it's definitely something that I haven't seen in my time. And I'm not even sure if my dad has seen it in his time either. But that's a great question. People ask it all the time. What if the company goes bankrupt or they go under? Well, guess what? Insurance companies have insurance. Okay. So it's important to understand that it's very rare. I mean, I've never seen that. I can't say it's never going to happen, but insurance companies also have insurance. So rest assured that no matter what, your benefit will pay out in some way, shape, or form, because if something were to happen to that insurance company financially, they have protection as well for that.
Where do we actually go about getting our life insurance policy?
Once again, you can reach out to, any financial firm that has insurance brokers. Obviously, my firm, we're really big with insurance. And I want to just touch on the importance of working with a broker. So a broker like myself is contracted with multiple insurance companies. So I don't work just for one. I always use the example, like if you were to walk into TD Bank to get insurance or investments, TD Bank is only going to offer you what TD Bank has. They're not going to say, go to BMO or go to RBC. When you work with a broker, the benefit of that is that, we are contracted with multiple companies, the top ones in Canada, that can then look at the different, because I will say this, and that's a whole other conversation, but many insurance companies offer different types of products, different benefits. There's different bells and whistles that you can get, that you can add onto your policy to make it fit you. Mm-hmm. And if you're working with someone that only works for one company, you might be at a small disadvantage because you don't know what else is going on out there. Back to your question, you can work with a broker. You can, contact insurance companies directly. So if you don't know a broker or don't have any referrals, you can actually contact the insurance company directly, and they can pinpoint you to a representative that can, hook you up. So definitely there's resources out there. You can look online as well for brokerages in your area, and reps, I'm sure, would be glad to help you.
And if someone wanted to reach out to you in order to, for you to help them get insurance, how would they reach out to you? What would be the best way?
So the best way would definitely be via our website. So our website is www.cpn, so Cat Peter Nancy, financial.com. I'm also on Instagram myself. My Instagram handle is advisor on the go.
And I will include all of these details in the description box as well, if anyone wants to reach out to Nicole to get your insurance policy, because we definitely all need it. We're always hearing about generational wealth. I want to build generational wealth, and then I always hear people like you speak on how life insurance can help you build generational wealth. So I want to throw that question to you. I know we are both Black in our community. I don't see many people with life insurance that I know of, or talking about life insurance. So I want to ask you, how can we use life insurance to build generational wealth?
Yeah, great question. So, I mean, life insurance definitely is something that I feel needs to be more spoken about in our community. It's funny because other cultures have been using life insurance, to set their families up financially for years, right? And I feel that there really is, a big disconnect when it comes to that wealth building and us. I mean, things are changing, and I see that a lot with social media now that, a lot of Black young professionals now are looking to create that wealth for their family, which in the past wasn't such a big thing. But there's still a lot of education I feel that we need to have as to why it's important to instill, because I have so many clients that I meet now that tell me that their parents didn't have life insurance. And because their parents didn't have life insurance, it wasn't spoken about in the home. And, our first role models typically are our parents. So when we start our own families, if our mom and dad didn't have life insurance, we tend to think, well, they didn't have it and we're good. So like, why do I need to have it for my family? And it becomes this like trickle down effect. So it's important for me as an advisor to speak to people about the importance and the value of getting this coverage and putting it into their family now, to kind of stop that trickle down so that they can let their kids know the importance, and then their kids can pass it down to their kids of why they need to have it. Because once again, going back to GoFundMe, we see GoFundMe pages being raised all the time. And it's kind of like become like this like backup plan that people just, okay, let's just crowdfund. And, GoFundMe has its place, and it's definitely, a great tool for people to use to, create financial stability where it's needed. But it's definitely not, it shouldn't be the go-to thing. Like, it shouldn't be the go-to thing when it comes to when life insurance is there. I think a lot of people also tend to feel that life insurance, is very expensive, and they have these preconceived notions of what they think it might cost. So they don't want to add an extra bill. But if you love your family and you want to create a legacy for your family that maybe your parents didn't create for you, you can do that with life insurance. When there are two incomes in a household and, this one income is now gone because you passed away, a lot of the times, whether it's a single mom or a single dad, the standard of living cannot be maintained, right? Most people need that extra income to pay their mortgage. We need that extra income to pay for extracurricular activities and all of that. And all of those things will tend to suffer if the extra income isn't there. So number one, that's kind of the basis of why you need it, right? But going back to the generational wealth aspect, I mean, a lot of people who work hard to create assets for their family through investments and rental properties and all of that, if they were to pass away, tends to be a lot of tax implications for their beneficiaries to take over those investments and assets. So life insurance provides a liquid death benefit that your beneficiaries can use to pay off those taxes, so that those properties that you work so hard to, purchase can remain in the family and keep that wealth within the family, right? You don't want your beneficiaries or your kids to have to sell your stuff to pay off taxes or whatnot. Like, what would be the point of working that hard, right? So why not? Even the rich. I mean, a lot of people don't really think about it, but even the wealthy have life insurance. Of course, they have
all of them, right? Well, all of them have life insurance, right?
Yeah. I mean,
it's a key part of their financial plan.
It's a key part, exactly. Of course, they have money to pay off certain things, but in their brain, they don't want to use their own money to pay off taxes and all of that. Why would they want to do that? They'll use a life insurance company's money, right? So if the wealthy are even purchasing life insurance, there's no reason why me and you should not have a policy.
How do you know what policy is best for you?
Once again, that would be a conversation that you'd have with your advisor after looking over, your current financial picture, looking at, once again, any debts that you have, any assets that you have, and taking a look at, more importantly, what do you want your policy to do for you, right? Because once again, I meet people that have all different answers of what they want their policy to do for their family. Actually, just last month, I had a client that was really into charitable giving. And she wanted a life insurance policy, not for necessarily her significant other or her siblings, because she has no kids. She basically wanted a life insurance policy where if she passed, a large donation would be made to a charity of her choice, right? So many people have different reasons for getting it. So you have to evaluate what you want your policy to do for your family or for your loved ones or whatnot. And then taking a look at making sure that, any debt that you have is covered and all of that. Once those key areas are looked at, you'll have a clearer picture on what type of policy will be best for you. And you're not going to figure it out all on your own. That's exactly why you work with an advisor to kind of help pinpoint, and help you figure out along the way which one that you should get.
One more question that I have for you is, okay, what about the self-employed folks or the people who are entrepreneurs or they are creators like myself? Like, what is life insurance the best option for them, or are there other options that they can look into?
Great question. So yes, if you're self-employed, a creator, freelance, obviously most of the time you don't have any group benefits to fall back on at work. So it's very important for you to have, a life insurance policy. Like there's no question about it, because at that point in time, you're working for yourself, whether you have dependents or not. Once again, someone's going to have to pay, out of pocket for you passing away, funeral and whatnot. So life insurance is a must. But what I would encourage you guys also is to consider looking at some other coverages to make sure that your whole financial fence is covered. So that would include critical illness insurance and disability insurance. So disability insurance is something that self-employed people, it's a must. I mean, I have it myself. It's super important to have, because when you're self-employed, you're depending on yourself, whether you use your hands, you use your legs, whatever the case may be, you are your working instrument and you have to be protected, because if you get hurt and you can't work, ain't no money coming in. So disability coverage essentially will basically give you protection so that on a monthly basis, you can be paid out by the insurance company. It's dependent on your income, of course, how much they will give you. So your advisor will go through that with you. But disability coverage will basically give you a monthly payout to make sure that your bills are paid if you are injured and hurt. And you can get different plans that vary from 2 years, 5 years, or will cover you all the way to age 65 if you are critically injured and can't work again, for a long time. So that's important to have, because life insurance is fantastic. But if you don't pass away and you're just hurt, life insurance is really going to help you with that, because you have to die for it to pay out, right? So disability coverage is important, and critical illness coverage is important as well. So critical illness coverage will give you a lump sum payout in the event you are diagnosed with a critical illness. So it has to be an illness found within the policy. For example, heart attack, cancer, stroke, deafness, blindness. There's a whole list. But once you are diagnosed with a critical illness and you survive for at least 30 days, you are able then to put in a claim. And this lump sum benefit can help you with so many things. It can help you with treatment, can help you pay your bills because you're in remission. Maybe you have cancer and you're, doing chemotherapy and you're not working. Critical illness and disability definitely impact your finances tremendously if they happen to you. So you want to make sure that these are things you put in place ahead of time, because you can't get these things once that situation happens, right? A lot of people, they put it off. And when they get hurt, they call me and say, Nicole, what can I get? And it's very hard for me to help you at that point, because these are insurance coverages that are for healthy people. It sounds bad, but they're for healthy people. You need to get them while you're healthy so that when something happens, you can make the claim.
What if you're someone who is already sick? How does that work?
I'm so glad that you asked that question, because a lot of the times people just automatically write off life insurance because they have some pre-existing conditions already. Mm-hmm. So they think that maybe themselves or their parents can't get it because maybe their parents are diabetic, or they've had cancer before and whatnot. And yes, for traditional insurance companies, a lot of the times if you have certain illnesses, they will not cover you. But there are a bunch of companies, a huge list that I work with, that cater to people that have health issues. Okay. So don't write yourself off thinking, oh my gosh, I can't get it. There are different coverages called guaranteed issue and simple issue, where they will still give you coverage. It may not be a huge amount, but they'll still cover you if you're sick. That's what they're there for. They cater to people like you. So yes, you can.
That's good to know. I'm sure a lot of people are in that situation. Everyone, if you have questions that you have for Nicole, as I said, reach out to her directly, or you can leave them in the comment section and we'll try to answer them for you. Thanks, Nicole.
Thanks, Reni. Bye, guys.
Bye.